The Rebel Capitalist Show.
It seems as though the deflationist argument is if things stay as they are, and if we allowed the free market to work, we would definitely see massive deflation, especially in assets. But then the inflationist side of that, or the inflationist people maybe say, okay, well, we get that if the system stayed as is, and if the Federal Reserve actually obeyed or acknowledged the Federal Reserve Act, and if that was a constraint on the Federal Reserve, then yes, we would see price deflation, at least in assets. But we think that they're going to completely ignore it. Look at what they did in March. And at some point in the near future, we think that, as Dr. Lacey Hunt says, that we're going to start turning bank reserves that the Fed can print into legal tender. And that's MMT, where you're combining the balance sheet of the Fed and the Treasury. And because we believe the system is going to change, that's why we believe that the inflationary effect of all this money printing getting into the real economy is going to overwhelm the deflationary effects we should have in a free market. How do you see that?
Well, I don't know where it's going to go, but in the last 10 years, but really 30 years, the massive balance sheet expansion at the Fed, as well as all the other central banks of the world, which are just copycats and basically are racing the Fed to the bottom, that's basically gone into two things. One, the inflation of financial assets. I noted yesterday in something I wrote that household holdings of stock, both stock and mutual funds, went from $2 trillion in 1989 to about $31 trillion at present. Okay, that's a 16x, 15x gain. GDP during that period went from about 6 trillion to 21 trillion, or about 3.5 times. Well, that isn't normal. That isn't sustainable. You can't say that the value of stock or related financial assets has risen 16, 17 times over that 30-year period, when the underlying economy and the income and the output that it represents has expanded at only a fraction of that. So I think we have a tremendous asset inflation, and it will deflate if the Fed or the other central banks stop buying the bond. And at some point, I think they're going to have to stop. Even sanity will break through in those, behind closed doors in the Eccles building. And if the central banks ever falter or begin to try to taper or stop the madness that they have underway now, 120 billion a month at the Fed, 250 billion a month if you count the Fed and the ECB, and 500 billion if you take all the banks in the world. The minute that slows down, I think the whole financial asset bubble is going to blow sky high, and there'll be a huge day of reckoning. It's only a matter of time before the central banks run out of craziness, run out of nerve, run out of the kind of insanity that's driving the groupthink today.
Well, I got two questions there. What would you say to people who push back regarding asset prices being fair valued because interest rates are so low? And then number two, what would stop the Fed? I mean, they're not going to go to church one day and say, "Oh my gosh, I've been doing this all wrong." Do we get inflation that where they paint themselves into a corner where they can't print any more money, or because it exacerbates inflation, they can't raise interest rates because the debt's so big? Or, I mean, what calls their bluff?
Well, on the first one, it puts you in mind of the 12-year-old kid who killed both of his parents and then threw himself on the mercy of the courts on the ground that he was an orphan. Okay, so the Fed today has killed the bond market. It's killed the bond yield. The bond yields are absurd. There's 18 trillion of negative yielding debt in the world, and even the U.S. Treasury, the benchmark at 1% today is crazy. So as a result of killing the bond yield, PE multiples have expanded. But obviously, you're going to keep the bond yield at 1% forever. That can't continue. So I think that argument is nonsense. It's a non sequitur. In terms of why, I just don't see the inflation argument that suddenly all of this is going to go into spending for goods and services. I mean, when the bubble starts to collapse, it collapses on itself. I mean, the bond out there, there's 90 trillion of bonds in the world. There's a good short share of them owned on repo by Wall Street traders and investors and arbitrageurs. And when they finally have to unwind their repo and sell the bonds, the price of those bonds is going to go down, but it's not going to put any cash in someone's pocket to go out and buy some more cars or, other goods and services. I think this thing is inflated financially, and it's going to deflate financially, and I don't think it's going to spill over into 1920s, Weimar Republic or Zimbabwe or any of the rest. It's going to be a massive deflation in Wall Street. How that plays out in the real economy is really hard to know. It won't be good, that's for sure. But I think this is a Wall Street financially centered deflation, not a Main Street hyperinflation.
Doug, do you think we could get something like the 1970s? And I was, I was born in '73, so I don't recall it too much. But I think you guys were right there front and center. And just by looking at the statistics, I know that we had severe consumer price inflation. But from 72 to 74, I believe the stock market went down by 50% in nominal terms. So do you see a situation for the United States going into 2021 where we could see or start to see a similar process where we just cannot prop up these asset bubbles anymore? They start to deflate in nominal terms, but at the same time, consumer price inflation, the stuff that people buy at the grocery store every day, they're going up at, let's say, 7-10% per year.
Where interest rates are going, I'll say that eventually interest rates are going to go a lot higher because the only way you can get rich is by savings, and low interest rates, artificially low interest rates, where they're below the level of inflation, discourage people from saving. So real capital isn't accumulated. Sure, they're going to go much, much higher in the future. I don't know what's going to happen to the stock market. I can build a bear case and a bull case for it.
Right.
All I can really predict is financial chaos. One thing that I don't hear discussed very often is the fact that the major export of the U.S. since the 1980s has not been Boeings or IBMs or wheat or things like that. It's been dollars.
Right.
We've sent trillions of dollars abroad, and those nice foreigners have accepted them, and in exchange given us Mercedes and Sonys and cocaine and other good stuff. But at some point, since they don't have to trade in dollars, they're not going to keep taking them, and they're all going to come back to the U.S. to buy stuff here. Mm-hmm. And although I'm talking to you right now from Uruguay, I'm referring to here. So all of the wealth of the U.S. is going to be packed up and exported or owned by non-Americans who are going to be impoverished. And all those dollars with less wealth are going to result in much higher levels of inflation. So I think that's going to happen. But who knows? We're in terra incognita. We're dealing with crazy people in Washington.